Hi, Amanda.
Hi guys.
How you doing tonight, Amanda?
I'm good. How are you guys?
Yeah, not too bad.
I'm doing better than my trading account.
Yeah, take a hit today.
Just a touch, just a touch.
Mm,
It's my long-term option trades.
mm. So yeah, we'll get started here in just a minute. I did start the recording, and that will be sent out to everybody. Now we have the chat enabled. It's nice. I like the chat. It used to cause us some questions between people not knowing whether to ask questions in chat or in the Q&A. But hey, it's nice to get a little feedback and see people from, yeah,
Yeah,
is it cold in Connecticut? I'm in Colorado. It's been a pretty pleasant winter so far, but now it's starting to cool off a little bit.
any snow?
A little bit here and there, some in the mountains. I mean, for skiers, normally I ski, but I have a baby on the way. My second child is due in February, so I did not get a ski pass this year. So it can just be 70 degrees all winter as far as I'm concerned.
Yeah, yeah, cool. And congratulations.
Yeah, thank you, thank you. All right. Let's jump in. Thanks everyone for being here. These sessions, we've got about a month of these under our belt. We've had some positive feedback, so appreciate everyone being here. We try to kind of strike a balance between some brand new users who are seeing the product for the first time, and we don't want to overwhelm people, but also we want to have enough detail and richness in there that some of the more experienced traders can still learn something from the session. And have a little sneak peek about something which is pretty cool coming in the product, which we'll do a bigger webinar on later. But towards the end, I'm going to show something that's coming up that's new that we're pretty excited about. I'll start with the disclaimers. This is not a solicitation to buy or sell any security ever. This is not advice. You should read the characteristics and risks of standardized options. The results here are provided for general informational purposes as a convenience to the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Past results are not necessarily indicative of future results. The risk of loss in trading can be substantial. Carefully consider the inherent risks of such investments in light of your financial condition. Great. Probably most of you guys have seen me here or there on a webinar or two. My name is Jason Hitchings. I'm the CTO of Capital Market Labs. I have known Ophir since about 2007 or 8. I was the first employee of a company called LiveVol, and he came on to head some of the quantitative research. And we became friends there, and then our careers kind of went different directions. And then he created Capital Market Labs years ago. It was about a year in, and then I joined Capital Market Labs, and we kind of built everything that we have today. I wrote all of the code for TradeMachine on the front end and the back end. I've been in the options market for approaching 20 years now, and yeah, I've traded throughout that time. And additionally, I've gone very deep on options analytics and building custom models. I was trying to build a figure out models that were very accurate for predicting implied volatility and all the other Greeks, but to do it 200,000 times a second on a moderate sized computer. So I was trying to getting as much out of the models as I possibly could. So I've been at this for a minute now. So today we're going to do a deep dive on the Today tab. We're going to look at what everything is there, what do the links do, what does that little AI signal thing mean, which is a relatively new, addition to the Today tab. How do you decide which strategies you want to want to trade and what are the different strategies. We're going to do breakdowns and deep dives on each one of the individual strategies, but I'll give you some guidance on that kind of stuff. And then how do you know if something triggers on the Today tab? Well, maybe it was active in that moment, but how do you know if it's still active? It's a source of a lot of questions, and we're going to get into it. And then after we do that in about 15 minutes or so, then we'll just kind of turn it over to a general Q&A, which could last, 2 minutes or 20 minutes, depending on people's appetite. And then we'll call it a night. So this is the Today tab. And just a real quick breakdown. This is the first thing you see when you log into TradeMachine. These are the tabs at the top to navigate in the application. There's a little filter at the top, and this tells you whether the results that you're seeing here are for all possible tickers, or you can filter them down to just the Dow 30, just the NASDAQ 100, or the largest 500 by market cap. Each one of these individual tiles is a specific strategy. And within the tile, you have the ticker, you have the return that this specific strategy with this specific ticker has generated over the last 3 years. Generally, this is a strategy over the last 3 years. It says the number of wins and the number of losses, and then when it triggered. And pretty recently, maybe a month ago, instead of only showing the triggers that happened on this very day, we started including triggers that happened recently. One, sometimes they're still very relevant, and also it just kind of gives you a context of what's been going on. It's nice on the weekend when you log in not to have a blank screen, but it just gives you a sense of how often things are triggering and what's triggered. And sometimes, a 14-day pre-earnings call strategy, if it triggered yesterday, you might decide that that's still close enough to the window that you care about, and you might go ahead and take the trade. So there's some kind of discretion at that level. So in each one of these like items here represents an individual back test. But when someone's just starting off, it's quite overwhelming to figure out, okay, there's all of these different strategies. They all have different tickers to click on. This thing's called a fade the dip. This called a buy the dip, MACD momentum. That's fine. But so I see a ticker here. I see, Jack in the Box or GDS. I see all these different tickers, but what am I supposed to do with it? So a great way to start understanding what's happening is just to go ahead and click one of the individual links here, and then to dive in to see what the backtest is. Each one of these backtests has a link associated with it that can be shared, and that link carries all of the information that happened when that backtest was created. So there any earnings rules, any technical conditions, all of that kind of stuff is built into that link. So when you click a link, for instance, with this Jack in the Box buy the dip trade, and if you're brand new, you don't know what buy the dip is. I mean, you've heard the term buy the dip, but you don't know what our version of it is. So when you click the link, it opens up this backtest tab. Backtest tab is a simulator that is simulating what is happening in the market over time, but it's using real data to do it. So it's not a model like you're modeling the weather and you're kind of guessing what's going to happen in the future. It's actually saying, had you taken these trades, this is exactly the kind of performance that you would expect to a pretty high degree of fidelity. So just like if you can look at a stock chart and say, hey, if I bought Microsoft back 15 years ago and then I sold it today, that's a pretty easy simulation to do. You just look at the price 15 years ago, you look at today and take the difference. If there's dividends, you collect the dividends along the way. That's essentially what this is doing. It's just doing it with options, and it's doing it with a lot of technical and earnings rules and that kind of thing in order to give you a lot more ways to optimize your trading than just to buy and hold an underlying stock for a long period of time. So when we see this page and we're trying to understand what is this strategy, anytime you have a share link and you click it and you're trying to understand what's going on, you have this backtest result tile in the middle, and this is telling you what the actual trade is and what the results of that have been historically. It's at this start date and at this end date. So when we ran a simulator from 2020 in December until recently in December, the results were that we had 4 wins and 2 losses, and that the strategy made a 74% return. But what is it exactly? It's like, well, we can see that it says buy a call. It says a 40 delta call. You know, delta you might vaguely know that delta has to do with how in the money or out of the money something is, but it can all be a little overwhelming at first, especially for relatively new options traders. So let's dive into the different pieces of this a little bit. So we can see that from that backtest tab, this information carried over. 74% return, 4 wins, 2 losses. That will generally be the case. Sometimes there'll be slight differences. It might be 4 and 1 or something like that, depending on if, there's a slight change in the price before the end of the day on an option or something like that when it ran, but generally they'll be very close. So let's dive into actually when exactly this triggered. It said it happened 4 times. This is options that are expiring every 30 days, but only happen 6 times in 3 years. So when did it trigger exactly? So these are the technical conditions. And you can click technical open on the backtest tab in order to see the actual settings if you want to change them or see it that way. But what does this stuff mean? So it says the stock right now is greater than the 200-day moving average. But yesterday, it was less than the 200-day moving average. That means that it crossed up through the 200-day moving average. It says that the stock is greater than the 10-day exponential moving average and that the RSI, the 20-day RSI is below 70. So it's not overbought according to the RSI. Now, remember, when you want to actually look at these for today, you want to update the end date. Those share links get generated over time as we're scanning the market. But update to the most recent day if you want to drill down and see if it triggered today and really look at the data. So I'm updating that to the current day. Then let's look at these things. So you can zoom in on, and I'll open up. So we're looking at the buy the dip for Jack in the Box here. So at the very bottom here, there's this scroller that's pretty hidden. But if you scroll all the way across, now you have kind of a zoomed in version of this actual strategy. And see, on this particular one, I haven't updated it. So I'm going to update it to the current day. Because otherwise it would look like it hadn't triggered yet. So then we zoom in and now you can really dive deep into this data. And I took a screenshot to make it a little easier to look at this. So I'll go back to the screenshot. But that's what I did to get this real close in look. So it's saying that the stock crossed above the 200-day moving average. So yesterday, the red candles, the bottom is where it closed because it was a down day. And the blue is the 200-day moving average. So that blue line is a 200-day moving average. When you're zoomed in, it's not moving very much. So yesterday it was below the red, and today, this black bar, it crossed up through. And the black bars, it's the top of the bar that tells you the closing price. So it went from down there to up here. So it did cross. So that's still good and active. Let's look at the next condition. That the stock is above the 10-day exponential moving average. All the exponential moving average is it's just something that moves faster. It weights the current day's data more than the older data. Doesn't evenly count the value of all those days. Moving average is just looking at the average price over a period of time. Exponential means it counts the most recent days a little bit more. So the green line, as you can tell with this little square, the green line is the 10-day exponential moving average. And we can see that the stock is above, because the black bar is up here, it's above the green line. So that condition is also true. Finally, we scroll down to this RSI. I can show you here. This is the RSI. You can see I can kind of pan left and right here. And if I hover over this, on the left side, you can see a 62.82. And also in this little tooltip, you can see it. So that says it's below 70. And so that means that all of these conditions are still active. So we know that the technical conditions held true. But is that everything for a strategy that determines whether this is ready to purchase or not? Almost. There's generally, we look at earnings a lot. We decide whether to actively choose to trade an earnings event or to not trade the earnings event. We rarely just sort of stumble into earnings and just hold a strategy through earnings with being oblivious to earnings. That is a choice. There is a ignore earnings or nothing special in the earnings handling, but typically we say we're intentional about our earnings. And if it's not an earnings strategy, and Ophir created most of the strategies inside of TradeMachine, generally it's never trade earnings. What that means is if you're within 2 days of an earnings event, then you need to get out of the position. It means close if you're 2 days in front of it, and then you can open it back up if the technical conditions are still true 2 days after. But generally, we tell you if you're within 2 days of earnings, then this strategy is not active if it's a never trade earnings. So right inside of the TradeMachine, there's a lot of information at the top, but we actually use a really good quality vendor to come up with the projections for the next earnings events. And when they become verified, then they're putting money behind the fact that it's a guaranteed earnings event. But earnings are not anytime soon. So that condition is also met because earnings aren't for another 7 weeks or so. So in that case, all of the conditions for this trade are currently being met. So now we know that this strategy is ready to trade, but what do I do exactly? What am I supposed to buy? I'm not just going to buy the stock. What am I going to buy? So looking back at this little earnings tile, it says it's Jack in the Box and to buy the 40 delta calls. And it says days to expiration is 30 days to expiration. So let's use this to look at a real world example, because what it's saying is you want a delta as close to 40 delta as you can, and you want an expiration as close to 30 days as you can. But generally, these will not be exact. It will not be exactly 30 days. It will not be exactly 40 delta. So this is a good example of a trade. So what I'm going to do is I'm going to click the Show Options button in the very top, and it's going to pop open this options chain. That's this button right here. When you click it, it opens this options chain, and then you can dive into it. You can actually filter by days to expiration. You see that we have kind of not a great choice. It's either 15 days from expiration or it's 43 days from expiration. That's a little bit of a tough. So the 43 is slightly closer. I can filter on that. And then when I look over here at the delta, I'm looking for a 40 delta, which would be slightly out of the money. Jack in the Box is trading at 83.85. So anything above 83.85 would be slightly out of the money and have a delta above 50. One definition of delta is moneyness. And so there's not a lot of strikes here, though. They're $5 apart, the strikes. And so I now have a choice if I want to trade the 50 delta or the 30 delta. There's no, specific. Oh yeah, sorry. I think I might have misspoke. The 83. It's at 83.85 right now. So in this particular example, I looked at the 90 is the 30 delta, and sometimes that stock price can move after hours. So the delta might drift a little bit apart from the stock price if it moved after hours a little bit, which is also a possibility. Okay, so now I know roughly that I'm going to buy either the 85 or the 90 call for this in the February 16, 2024 options. So then what? So I buy the thing, and then how long do I hold, or when do I get out? So let's look at that next as the next piece of this puzzle. So on the left-hand side, there's these earnings handling rules, and that will tell you if you have a customs earning, like you want to sell it before an earnings event. If it's a never trade earnings, then you'd sell it 2 days before the next earnings. There's no technical closes. You could say, hey, if this crosses back down under the 200-day moving average and we close it, but this doesn't have any technical closes set. But it does have a 50% stop and a 50% loss set. So if the position goes up or down 50%, then according to this strategy, we would exit. If none of those things happen, then we would just hold it till expiration. You know, we might take a 20% win or 20% loss. Obviously, we're hoping for more wins than losses. So let's actually take it one step deeper and say, like, okay, 50% gain or loss of what? What does that really practically mean? So this shows the midpoint price, at least at the end of the day. And this is showing $1.62 and change for that option. If we did it 5 times, then that would mean that we outlaid $815. This is just a simple naked call, and so there's no more complicated picture of risk when you're just owning the options like this. So 50% would mean if your P&L goes up or down $407, then it would be time to exit if you wanted to hold to this strategy the way it's written. Also, the backtester tests using data at the end of the day, or just a few minutes before the end of the day. So if you really want to be as true as possible to how this is simulating the market, then you'd wait towards the end of the day and see if all these conditions are still true. So, you know, if you don't want to set a stop and a limit, and you don't want to, if you're at your job and you don't want to be like staring at the screen all day, you might ask, like, well, do I really have to set the stop and limit, or is it a good enough trade on its own? It's a good question. So let's try. Let's say if we set the gains and losses, the stop loss stuff, to 0, then it won't apply it. And what happens with this trade if we set it to nothing? Ouch. We go from a nice solid winner, I think it was 4 and 2, to 0 wins and 4 losses. So I think there's a great and perfectly valid thing to do. You can check deltas, you can check stops and limits, you can definitely do your own testing, make it fit your own, you know, ideas and the way you like to trade. Maybe you want to set a bigger stops and limits, maybe smaller. But using the tool, you can say, hey, is that a good idea or not? Should I let the trade go? Should I let it ride, or do I need to exit this thing and take a profit or take a loss early on? And in this case, it's telling you a strong signal. You should probably use some stops and limits. You know, you don't want to just let this thing go to expiration without having some of that in there. Okay, so that now you've figured out when this thing triggers. You figured out what to trade, how to get into it, when you should get out of it according to the strategy that we've created. What if you want to like dive in and get deeper on the philosophy of like this trade? Like what's really behind it and why? Every single one of these trades has a little question mark. It's kind of faint and hard to see, but if you click it, it's going to pop open more information about this specific trade. Most of them have a really high quality video that goes deeply into when it triggers, what's happening in the market, what that dip looks like, how we measure the dip, and looks at some historical performance and why it's done well. So we definitely encourage you to dive in and look at each one of these. And we're also going to be having additional help sessions pretty much on every strategy on the Today tab. I think we're going to kind of go through piece by piece. Some do have passwords. So if it has a password, please do make a note of that. You'll have to enter the password because some are too proprietary. Okay, so something else that we added recently is this AI signal, this little AI with a flag. So what does that mean if you see this little AI star? And you might see the strategy without it and the strategy with it. In this case, the results are the same, which just means that the AI signal was also triggering every single time. Many times you'll see there's a difference where you have fewer trades with the AI, but that the results are better. So what that little AI means is using machine learning, we've come up with our own proprietary version of what skew and kurtosis are, which essentially means skew is when the stock moves, it tends to move to the upside or tends to move to the downside more often. And the kurtosis is how often it makes those jumps. We're calling them skew and kurtosis, but they're actually a little more involved than that. And that kind of gets into some of the, heart of what makes it kind of special, the secret sauce in there. We have put at the top of the screen our proprietary versions of skew and kurtosis so that you can just see and make sure that they're still active and valid and all of that. So those are there for your ability to see them. But just know if you're just trying to look at skew or kurtosis in the most basic way, it's not going to be quite the same way that we do it. We have found excellent, truly excellent results from these trades when using the skew and kurtosis data. I personally, and again, I can't make any recommendations to anyone, but I personally am trying to take as many of the Today tab skew and kurtosis trades, the AI trades, as I can, because that's just really performing extremely well right now. So, I'm a software engineer. I have a very busy day, but I set alerts on the Today tab and try to take as many of those trades as I can. So a question that comes up is, let's see. So I only see this MACD momentum. There's only 3 tickers here. Does that mean when you set the technical conditions, there's only 3 stocks in the entire market today that met those technical conditions? That seems unlikely. That's not the case. We put a bunch of additional filters on these to make sure that the strategy has performed very well, not only across the board, but in the specific stock. So we test different time frames. As an example, I said the win rate in the 1 in 3 years has to be greater than 50%. We need a certain amount of return. So we want to see at least a 15, 20% ROI. But we also test a bunch of other time frames. So for each strategy, we've kind of tweaked and customized for that particular ticker what makes this successful. Many times there could be 5 different criteria. There's 5-year back test, there's 10-year back test. So there's a lot of different things that goes into this. We make sure that there's a minimum number of trades because, if it only on a 5-year back test, if it only has 1 trade, yeah, that's 100% winning percentage. But we don't consider that enough of a track record that we would feel comfortable saying, yeah, this is something that you might want to think about trading. So there's a bunch of criteria that go into it, and we are filtering on a select few that seem the most valid and most interesting from a backtesting perspective. You might say, well, okay, so you have set a bunch of criteria, but I like doing the MACD momentum trade. I clicked here and I watched the video and I think it's a great trade. And I think that I'm more interested in just what the results of the last 5 years are like, because I don't think the last 6 months or year is going to be what the next 3 or 6 months is going to be like. What if I want to do some version of my own? Wonderful. Really, the backtest, the Today tab is really just kind of an entree into what this tool can do. And so let's just dive in and do that. So we're looking at this MACD trade. I'm going to click it, and that's going to pull up a custom strategy. This is one of the more advanced ones. That just says that it couldn't open on a certain day. The more legs and the more, if you have 3-legged strategies, etc., then sometimes when it's looking for a certain delta at a certain time frame, etc., it just can't find it. So it's just letting you know. Okay, so you see this funny name. It says it's a 50-20 diagonal. Maybe CS is something that you're familiar with, that terminology. Maybe it's not. So I want to just take 1 second to show you if it's not one of these strategies that's pre-built here, you can click edit and dive in to see exactly what the strategy is. And so this is showing you it's a custom strategy that we've created, and it's doing a diagonal call spread, a 50 delta at the money, that's 60 days out, and then selling one 20 days, 20 delta, that's 30 days out. So something that's going to expire more near term. Just got to gain back, but it's going to keep rolling this as often as it comes true. So that's the strategy from the backtest link. But what if you're interested in 5 years? And what if you don't not just interested in GDS, but what if you want to test like the entire NASDAQ 100? Well, you can test all kinds of different sectors and industries and ETFs here. You can create your own portfolios. You can do new baskets of your own favorite stocks. You might be a subscriber to CML Pro. You might just want to enter top pick stocks in here. So you can do anything that you want to. And you can see that this is running relatively quickly. And that's because I'm a platinum user, which means I've just paid for a year of my service upfront. It lets us buy servers a year at a time on Amazon, which gives us a nice discount. So we can kind of give more speed to users that are able to do that. We also give you a little price break as well, because it just kind of helps us. So it's going to go through and test the entire NASDAQ 100, and it's doing just a few a second. I have the results on another screen, but it just completed. And now these are all of the results over a 5-year time frame. And if you want to say, look, I want to do my own criteria, first of all, you could go in here and you could set stops and limits, or you could put technical closes. You can modify and adjust this to your liking. You could edit it and you could change it to a 50, 30 delta call spread, or anything else you want to do. Once you've done that, you can start searching by the biggest returns. Like that's a nice return, 752%. You could look at the average trade return. So you can get in here and start customizing it, and then you can set your own alerts just by going down and clicking these results. Anytime you click on an individual result, you can dive down and see every single trade. So you can really go deep. You can download it, you can copy it, and just like analyze it as deeply as you want to really understand the strategy thoroughly. But after you've selected whichever strategies that you're most interested in, you can click Add Alert, and it's going to create this share link, and that share link is going to be the strategies that you just selected. Here's that QA 50-20 call spread. And so that's going to pre-select those for you. And you click Add Alert. And now from that point forward, you're going to get alerts on those strategies delivered directly to your email or to your phone number. So you can really own it and start to customize it yourself. Okay, well, what if you're not quite ready for that? That might be something that you kind of get into over time, but at first you're just like, hey, I picked one strategy. I picked buy the dip. I get it. I'm buying a call. I understand it. I watched the video. I understand when it happens. It seems like a good strategy. I just want to know when there's new ones of these, I can't just be staring at my computer all day. You come up here, you click Set Today Tab Alerts, and you can do exactly that. You can say, hey, I just want to buy the dip, and I only want to do it if it's a pretty large company, one of the largest 500 stocks by market cap. And I want you to email me throughout the day, because I have time during my day to check one or two strategies that you send, and I'll pull it up on my brokerage account and I'll see if I want to trade it or not. You click Save, and there you go. Now you'll get emails for those specific strategies sent to your inbox. And then yeah, you can click on it and have a look. You can see if there's liquidity warnings on it, because that can happen. It can give you liquidity alerts if that's the case, or you can look at the options montage and say, hey, this is super wide. I might be able to get in, but I might have a hard time getting out. I don't want to mess with it. Or you can say, this thing looks great. I want to buy it. It will also tell you, if you subscribe to one of these things, it will specifically say in the Today tab alert email that you get if it's an AI trade. And so if you only want to trade the AI trades, you just go ahead and subscribe to all of them, and then just look in your email. If it says AI, those are the ones. In the future, we might have an AI filter, but we haven't added that yet. Okay, just a couple more little things to notice. Underneath this, we have this kind of stock notable technical breakouts. This is pretty similar. It's just stocks that have triggered based off of holding a stock for 22 days and then closing it. 22 days is basically the average number of trading days in a month. That's why we ended up with 22 days. Same basic concept. When you click one of these, it opens a stock back test. And if you ever want to see the conditions, you can just click this and open it. It'll show you the exact conditions that make that true. Finally, down here, there's a little earnings calendar, and we're not in earnings season right now, but this is pretty helpful to see what stocks are coming up, if there's things that you want to trade in earnings. You can also set your own alerts for earnings and things coming up. And something I like to do when setting alerts, if I'm going to, let's say if I have an earnings trade, I'm going to hold for 14 days or something, I go into the calendar and I set an alert to close a trade. So I might just say, if I know when the next earnings is, I could say for a certain stock and say on a calendar day, either you set before earnings, or if you just want to hold something for a week and sell it, I just set this and say close Apple or whatever the thing is. I can add an alert and it just sends me a little reminder to close it on that day. Heck, you can send yourself text alerts for things in your private life. You get unlimited alerts in the alerts thing. So yeah, if you just have to pick up your cleaning from the dry cleaner, feel free to set it in a calendar alert in there. It's a pretty handy little tool. So that's the Today tab alerts. You can kind of set as many as you want. Okay, so we spent quite a bit of time trying to determine if a trade was currently active. We had to drill down into the stock. We had to look at all of the technical conditions to see if the stock was still above this line and below that line. It took a lot of brain power and it took some time. And then we had to go to the options montage. We had to look at the expiration. We had to look at the delta. And there's more complicated scenarios where there's an earnings event where you're trying to make sure that you have the earnings event. So the option has to be expiring after the earnings event. So there's a lot involved in that. And it puts cognitive load on you to have to take 15 minutes out of your day. It's both time and just brain power. It's not just something you can kind of do on your phone on the side real quick. You have to really study it. And it's a lot to ask people to stop in the middle of their day and do that kind of stuff. So let's go back to the trade that we were looking at in Jack in the Box. What I'm about to show you is not available to everyone yet. And we spent a lot of time analyzing this trade to see if it was still active on the day. What if it could just tell you? What if it could say it triggered as of right now, and that the trade is to buy 585 calls, no longer delta, just 85 strike calls for the Feb 16 expiration. And that gets even more helpful the more complicated the strategy gets, because if it's a custom strategy or call spread, it might say, it'll tell you each one to buy. And so this is showing you that as the delta goes up, there's not a lot of strikes here, but you can see that once you're at the 20 delta, then that'd be the 95 calls, and the 30 delta would be the 90 calls. All of these are, because it's a 50 delta call, all of these are, for the current options today, are buying the exact same strike. I click this little settings thing if I want to say, okay, what if I want to look at really deep options? You can see this is buying now went all the way down to the 70 calls, which would be the closest to the 90 delta. 90 delta means it's very in the money. So we're really excited about this feature. We are planning to release it in about 10 days, and we hope that it makes using TradeMachine a lot more fun. And just, you can use your mental faculties to do lots of other important things in the day other than staring at options chains. Now you can just kind of confirm that this is indeed the trade that you would want to take, but that's coming soon. All right. With that, we would love to just dive into some general questions and answers.
Beautiful. Beautiful job. Let's see if I can turn my camera on. Okay. From the top, besides all the good evenings and the hellos and thank yous, At what time during the trading day does the back test capture the option pricing to generate its results? Do you want to answer these or you
Yeah,
want me
I'd
to
be
take
happy
a
to answer that. Yeah, so for on the back tester, it's using closing stock prices and closing option prices, or just a few minutes before the close, because the options are a little more liquid. If you've ever watched options, oftentimes 20, 30 seconds before the close, a lot of algorithmic traders and market makers, that kind of stuff, they don't want to get stuck with a position that they can't. If someone sells them 5,000 calls right before the close, they don't want to hold that overnight without being able to like sell some other calls against it or something. And so they make their market very wide in the last minute or two before the market closes, so that, yeah, if someone sticks a 500 lot trade on them, they know they're getting paid to take that risk. They're not collecting a penny of their, however they're calculating their edge. They're not collecting $5 or $10 to take that huge trade on overnight. They're going to say, okay, yeah, you're going to have to pay me, thousands of dollars of edge in order for me to take that big trade and take that risk. So they oftentimes make their markets go wide at the end of the day. And so oftentimes the very end of day prices end up a little wide. And so we use prices just a little bit before the end of the day for both stock and options for this historical backtesting. That's also when a lot of the volume happens. Most of the volume in trading happens in the first 20 minutes of the day and at the last 20 minutes of the day. If you're ever watching an intraday tick chart, you might see that towards the end of the day, it really starts jumping around. And that's just the nature of the beast. A lot of different firms, shops, humans, individuals figure out what they want to do, and they kind of are waiting for the opportune time over the course of the day, deciding at the end of the day if they want to take the trade or not. So historically, it's using end of day prices. But to see if things are triggering for the alerts, we're using intraday stock prices. So we are taking the historical data and then we're tacking on the current stock price within the last 5, 10, 15 minutes and saying all these technical conditions true for simple moving average, all that kind of stuff. So we're doing all the calcs by appending that most recent stock data. When things trigger in TradeMachine, alerts trigger. Alerts are triggering based off of the stock data and the stock earnings data. They're not triggering based on the options data. For instance, currently the backtester doesn't say, hey, if there's increased open interest in the options on the 85 strike call for February, I want to buy it. Currently, that's not the way that the backtester works. The backtester generates its signals off of the underlying security. And then once you have your signal, then you decide how to trade it. Now, many times with the strategies that we've created, they come with a trade. They come with a buy a 50 delta call or buy a call spread or buy a diagonal or sell a put spread. But that what to do next is independent of the signal. And the signal is based off of the stock technicals and the stock earnings. Is basically the whole thing. One other thing to consider is that there could be a strategy on the Today tab that says buy this thing and hold it for 30 days and only sell your call if it goes up or down 50%, like we just looked at with Jack in the Box. The Today tab is not factoring in if it said that thing triggered 7 days ago. It doesn't know if you took that trade 7 days ago or not. It's approaching every day new, and it's saying if you have no position, now is a valid time to open a position. If you already have a position, you could decide whether you want to place a trade again or not. If it bounces down below this, if it crossed above the 200-day moving average, you decided to take a position, then it dropped below, and then it dropped back up again. That trigger can go off, but it's not paying attention if it triggered 2 days ago or not. It's each one is fresh. So it's up to you to decide if you want to take the position based off of the positions that you have. So yeah, don't be confused if it triggered 4 days ago and it says, hey, this thing triggered today, but I thought I was supposed to hold this thing for 30 days. For the alerts and for the Today tab, it's assuming it's approaching, it's looking at what the historical performance has been, but then it's saying, hey, if you don't have a position, now's a perfectly good time to get in.
Right.
The long-winded response, but the final piece of it is what I just showed you about the options, which is not in the product yet. but where it actually says this strike, this delta, etc., that is based on intraday options data. And that will be the first time we've ever had intraday options data in the product. So before you place the trade, you should definitely look at your brokerage and look at your options chain and make sure that the numbers line up and the deltas make sense and the stock didn't move radically since, that options chain data was printed. But that should really speed things up for you. So that's the first time that we're providing that in that form to users. Also, when you click this show options chain, that also is showing the intraday options data about 15 minutes delayed. But that's coming from the CBOE, so it's very solid.
Cool. As far as the current day, this is not a question, it's just me amplifying very quickly. I usually wait till 3:30 to 3:45, evaluate if the alerts are still valid at that time, and then make my decision in my trading software if I want to take the trade or not. And I was under the impression that for the current day data, you are capturing the results at around 3:45. Is that too early, or is that about?
That's about accurate, yeah.
Okay, cool. For the technical parameters, does the back tester use closing prices or current prices for whenever the back test was run? So you're going to get the alert based on that day's prices. The back test of historical results is going to use the historical prices on the day that you're back testing, or the start between the start and the end date that you're back testing. Do you want to add to that?
Nope, that's good.
Okay. All right. Just feel free to jump in.
Mhm.
All right. We have a quick pattern finder question. When can we get a dark screen choice? Very hard on the eyes currently.
Yeah, that's fair. Definitely email support if you haven't made that request. If we get enough requests, we'll get that in. We just had this big release on TradeMachine, and so I know that's something that people have wanted for a while. I don't have a date for you, but we'll try to get that out as soon as possible.
All right. Along those lines, Jason, can you possibly make the text in TradeMachine darker so that it's easier to see? It will also be nice if the font was larger. Us older folks have trouble reading the text as it is presented. Thanks. Do you want to highlight the dark mode?
Yeah, we can see if in case you don't have the dark mode. So yeah, I always thought of myself as pretty spry and young, but I will say when I'm working on my laptop, I have to push it a little further away these days than I used to. So I feel you on that. Let's see what's going to come up here. Yeah, so in case you don't know, and in case this helps, this little moon up here, we'll switch to dark mode, which depending on your settings and that kind of stuff, depending where you're seated, could help. I'll show you one other thing. I'm going to be pressing.
The dark mode definitely helps me. I just wanted to interject for a second.
Yeah, thank you. So there's something that you can do which is beyond. I do think we could do better with contrast, or having a really high contrast mode that's even beyond the dark mode. I think we could certainly look at that. I want to show you something you may not know. And what I'm going to be doing is I'm going to be scrolling up on my mouse wheel while holding the control button on my laptop. And if you're on Chrome, this should work. I hold control and I do this. It makes everything huge. So your browser has an ability to zoom in that you probably are not using. You can zoom back out this way. But at this stage, and it should still, things might get a little chopped off. You can scroll in or out a little bit. You can also try reloading the page, once you've zoomed in a little bit. But now things are pretty big. So let us know if that helps.
Yeah. So it's holding the control down and then using the wheel on your mouse.
Yep. And every time you go in or out, you can see it's adjusting the zoom. Actually, I can tell sometimes I do the shorthand so often I forget how to do the other thing. That little zoom button started showing. So definitely inside of like settings, here's the zoom. This is going to be easier. So the dot 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 gets you settings, then you can zoom in this way. So I hope that helps. Let us know if it doesn't. We always want to make the product easier for everyone to use.
All right.
Oh, you know what? I'm sorry. I thought I was sharing my screen. So you
Yeah, well, I saw it.
okay, good. I don't have the green box around my screen, so then I thought maybe no one was seeing it. So that would have been very verbose if you weren't seeing my screen. Okay, I'm gonna stop sharing. Okay.
All right. All right. Are well-established liquid ETFs included in the universe being drawn from the strategies as shown in Today tab?
Um, generally not. They're generally non-ETF stocks. Well, we do backtest them, so you might see them appear. But if you want to do your own, we definitely encourage you click one of the links, bring it over to the backtest tab, and then click portfolios, and then choose. We've included about 8 or 10 big ETFs in there:
Yeah.
XLF, XLU, DIA, et cetera, QQQ. So you can definitely, create your own or create your own basket if you're not seeing what you want in there. Like, we really encourage you to create alerts for yourself that really, customize and make it your own.
Yeah.
Especially if you're a platinum user, then that stuff happens. Like, it's very quick to backtest that kind of stuff.
Yeah. I do a lot of personal back tests with SPY, QQQ, IWM, a number of the crude oil ETFs, gold ETFs. It's very easy to create a portfolio or to just enter these symbols and do whatever kind of back test strategy you like. Okay. How important is the volume and open interest as far as being able to close a trade? This question's come up before. Uh, I personally, and then Jason can tell us what he does. I personally hardly ever look at the volume or open interest for an individual strike, an individual option. I look at the bid ask. And if it's reasonably tight, then I consider that liquid enough for me to trade. So it's really how far apart are the bid versus the ask for the options that I'm interested in trading.
Yeah, I agree with Max 100%. Ask yourself this question. Would you rather trade something where the bid ask is $1 or $2 at $1.06 with no volume and no open interest? Or would you rather trade something that has 5,000 contracts traded on the day with 200,000 contracts open interest where it's $1 at $2? Now, if it's $1 at $2, depending on your brokerage, you might be able to go back. You might see the recent trades. Oftentimes there is hidden liquidity more than the bid ask spread looks like. And if you put in a bid at $1.50, you might get filled there. So I think that the volume and the open interest could give you hints about if there's ability to trade more than the bid ask spread looks like. But I think the gold standard is a tight bid ask, because the chances that you're going to take all of the volume available on the bid or on the offer is very small, unless you're trading 500 lots. So if you're trying to do a 5, 10 lot, 20 lot trade, that the bid ask is going to have plenty. It's going to tell you all the liquidity that you need to know. And the chances are now, if you're looking at an option montage and you see everything is $1, $2 wide, and the one strike that you're looking at happens to be very narrow, there could be a person who is putting in a bid and slowly ticking up their bid over time because they're trying to get in or out of a position. So you could see one strike that's very tight. And if the rest are super wide, then yeah, it could be that you get into this trade now, but it's hard to get out of. But if you look down a options montage and things are, 4 cents apart, a nickel apart, 10 cents apart, up and down, then the volume and open interest are almost secondary. That said, you can always, whether there's any open interest or not, you can always try to get an aggressive fill. And and see if that works for you or not. Even if things are very wide, even if there's not a lot of volume or open interest. But if you are filled, you might have to accept the possibility that it could be a little bit harder to get out of the trade. At a price that you like. The chances that you're going to have to hold it through expiration are higher. That said, at expiration, if your option ends up $2 in the money, someone's going to be happily, buy it from you for $1.95.
Yeah, yeah,
So those are some considerations.
yeah. I've seen if the bid ask is relatively wide, put your limit in where you'd like to get filled and you just let it sit there. You might modify it as the underlying stock moves, but perhaps someone needs to unload what you want to buy or the opposite. But in general, if it's wide getting in, it's going to be even harder to get out by a factor of at least 5.
Mhm.
And it's going to take away from your potential profits because you want to get out of the position because you're making money or you're losing a certain amount. And if it's a wide bid ask, it's just going to exaggerate those conditions and lessen your profit. At least that's what I found.
No, I definitely agree with that. If you end up with something really deep in the money, you have some calls that really do great and you can't get out very well. It's more advanced, but you would have the possibility of selling a certain amount of stock against it, so that if the stock goes down, you kind of lock in your profits a little bit.
Yep.
If you have 10 contracts that are, deeply in the money and they're super wide getting out, then if you sell some stock to kind of balance it out, it's a little bit more of an advanced topic, but you can use the delta to kind of tell yourself approximately how much stock you'd have to buy. If it's 90 delta, then you basically need to get 90 shares of stock. If you're long calls, then if you short 90 shares of stock, then you're going to be, it's no longer going to matter to you whether the stock goes up or down. The next dollar of the stock movement, you're going to make it in the calls and lose it in the stock or vice versa. So that's called being delta neutral. So you can make yourself delta neutral that way, but the delta changes constantly. And so it takes a lot of active management to do that. It means that going on every day, adjusting your stock position, that kind of stuff, it's a lot of stress and headache. But if you have a winner that's 20,000, you made $20,000 on a trade, it's a huge win, but you don't want to lose $4,000 getting out of the thing, you could do a little research about that.
You just have to balance that with the short stock fee that your brokerage firm is going to charge you.
Yeah. But that's a little bit, of a
All
more
right.
advanced topic.
All right. Will you be integrating TradeMachine into a brokerage like TOS or Tasty Trade?
Yeah, Thinkorswim or Tasty Trade. We've had interest expressed in us to do this. The first step that we're taking is just making it a lot cleaner for you to see exactly what strike and expiration to trade. Ophir and I ran a company that started a brokerage back in the day, and it just the closer you get into the brokerage, it just opens a lot of cans of worms. And for us to kind of move really quickly, develop new things, kind of keep it fresh and exciting, it's just we have decided so far not to take that direction, to be more agnostic with a brokerage, but that could certainly change. But no plans to do that currently. And I think with this new feature, it'll be a lot easier, whether you're trading on Thinkorswim or Tasty Trade or Schwab or anywhere else, to get your trades placed really quickly and easily.
All right. Fantastic presentation, Jason. Thanks for the technical look and explanation. Good to know you can also take trades from the alerts.
Great.
All right. Now there's a personal comment here. I don't know if you're seeing these, Jason.
I haven't looked yet.
It's a good thing Max is wearing a tie. Otherwise, he would just be a floating head.
Yes, I had the same thought.
Thank you very much for that feedback. How do you use your skew and kurtosis? Are the extremes in these a strategy by itself?
I think it's definitely worth testing. They're going to happen less and less often. If you're saying, I only want to look at things where the skew is above 10 or the kurtosis is above 20, they're going to be far fewer trades. But I do think that even though they won't happen a lot, you could place a bunch of alerts. You could put alerts on the entire NASDAQ 100 because they might not trigger often, but they might be extremely profitable. So I would definitely say dive in and backtest things. And when we come up with the numbers that we're using, we also are conscious of the fact that we want it to trigger relatively often. it's a balance. The AI triggers right now trigger less often than the exact same strategy without the AI.
Right.
But I do think that if you push those numbers more, you might get more edge out of it. So I definitely encourage you to do that.
Right. And if you look at the strategies that Trade Machine is using currently, they've been back tested thousands of times. So you can use those values and try and apply them to a custom strategy that you may have. So it's a good thing to look at all the AI strategies and see what those conditions are for kurtosis and skew.
Yep.
All right.
It's a good starting place. Like Max said, all of the strategies inside of the Trade Machine, we've done thousands and thousands and thousands of back tests against. And so, at least when we generated the strategies, they were excellent strategies for that time in the market. So it's a good starting place.
Okay, speak very quickly. Speaking of skew and kurtosis, someone asked in community today to ask because they could not attend, is there a way that you'll be able to see the historical values of skew and kurtosis for a stock, like even if it's on a graph or something like that?
Yeah, it's a good request, and we'll probably get it in there. The skew and kurtosis are relatively new, and we haven't charted them out yet. But we'll
Okay.
we'll probably get there.
All right. We're at 8 o'clock. Do you have a few more minutes?
Yeah, let's give it. I was kind of long-winded in a couple of my answers, so yeah, let's try to churn through some more real quick.
Okay. Is the bottom of the Today tab a replacement for Stock Trade Machine from 3 years ago?
The bottom of the Today tab a replacement. Yes. So
the second part before the
basically,
earnings.
what we promised all of our Trade Machine users, because Trade Machine with options it's a more data intensive, more complicated product, is that we said to the current Trade Machine members, when we include major features in Stock Trade Machine, we're going to also include them in Option Trade Machine. So there are some users that have both products because they just kind of like the flow a little bit different. But yes, we included those to kind of reward our long-standing members for being members of Trade Machine.
Okay. Duplicating triggers. So if something happened 4 days ago, and it's a 30-day trade, but it happens 4 days later, didn't that used to not trigger if there was an open position?
On the backtest tab keeps a running current position. So the backtest tab will not trigger multiple times if it doesn't close. It's not going to open the same position multiple times for an options trade. For alerts and for the Today tab, however, it will assume that you have no position and that it will trigger every single time.
Got it. If I see the charts are very bullish and you're at 50%, I assume that's 50% profit. By staying in the trade, are we going against the back test? Should we retest or stay in a little based on the charts? So you're not following the guidelines of the back test. Number one, that's not necessarily a bad thing. That's your personal decision. You could do another back test without that limiting condition. Or what I will do sometimes is I will take off a significant amount of my size and maybe I'll leave 1, 2, 3 runners on.
That's how I like to do it too.
Yeah. Okay.
I got trained by a floor market maker, and that was something, one of my very first option trades back in 2006, 2007. I'm like, hey, I'm making some money. Should I sell? And he's like, sell half. And I'm
Yeah.
like, that's great. Because I love to be able to sell enough to lock in a small profit.
Yeah.
Maybe I lock in 10, 20% on the trade, but maybe I leave 3 contracts open where, yeah, if it takes off, then I do great. I feel so much better and so much less consternation about, do I sell the whole thing or not? When I can take a little bit of profit, I can lock in a winner no matter what happens. I have a winner, and then you're kind of playing with house chips at that point. So I love to do exactly what Max said.
Okay. Will part of the intraday data include implied volatility or things like implied volatility rank or percentile?
So we're using the implied volatility is used to come up with the delta. So the delta uses that in some sense. We may bring back implied volatility intraday into the product. We are actually sourcing it from SIBO, and they kind of pulled that that product altogether.
Yeah.
I've generated my own intraday implied volatility indices. I can do it if I need to. But we lost our vendor basically on it, and we asked our community if that was a big deal, and most people said that they weren't using it heavily. You can use the VIX as a proxy. I know it's not the same, but if you want to know how the market volatility is doing, you can look at the VIX. And if that's something important to you, please email support. We take those requests very seriously.
Okay. Yeah. I found it very helpful, but I guess I was in the minority. I mean, even if it's just IV rank, which
Yeah.
is a very simple calculation, it would be very helpful. I mean, I have it in my trading software anyway.
Yeah.
But just for alert generation and back testing strategies, be good to have.
Mhm.
Very nice presentation, lots of help. Thank you.
Great.
Could you please demonstrate how one can look at a back testing at a portfolio level, say risking 5%, 1%, or 2% of an account over one or two or three strategies? This is a very complicated portfolio.
Yeah. Yeah, I think that would be there's a really, really, really great option speculation webinar that Ophir gave on the Learn tab, where he takes two different trades that he builds up over the course of a year, and he walks through them. And each trade, he were 7-figure winners, so they're huge wins for him. So it's really interesting. It's on the Learn tab under option speculation webinar. So that would be a good way to like look at a real world example of diving in deep. When it comes to a portfolio, I mean, I think you should have your long-term investments and you should have the stuff that you want to take shorter term, more riskier bets with, is how I would approach it. I mean, I can't give advice. I'm not giving advice, but yeah, I have my long-term stock investments. That something like CML Pro is, I personally find super helpful to help me create those. And then I have, yeah, I might take 5 or 10% of my account and be willing to take some, buy out of the money calls that I know I might lose.
Yeah.
I might lose
Yeah.
$2,000 on a trade, but that's not my retirement account.
Yeah. Excellent. I think this person wants to take it a little further and is looking if there's a way to back test an overall portfolio at different levels uh, of involvement of different components, which Trade Machine doesn't currently have.
I mean, create portfolios, obviously, and you can put like limits, that kind of stuff. But yeah, it's not going to look at your overall. It's not going to say, I have a $200,000 trading account and I want to deploy maximum, $20,000 in option trades. What are the best couple to take? I mean, I think you can kind of piece that together yourself, but that's not the approach that Trade Machine takes. Like it doesn't do those steps for you right now. It take an Excel spreadsheet and some consideration.
Okay. It's 8:07. We'll make this the last question. And then anybody else who still has questions, bring them to community. I'm there every day. If I can't answer it, I'll get the Trade Machine team to tell me the right answer. Is there a way to save dark mode as your default versus having to click on the icon every time you enter? I don't know. I clicked it once and I've got it every time.
Yeah, if you that should be saved as kind of in your local storage. So if you've disabled local storage on your browser, then it won't save, but otherwise it should.
Okay.
I see the question. What is Trade Machine written in? The backend is written mostly in C# in terms of the language.
Okay. Are you looking at the Q&As?
I just did. Yeah, I just.
Okay. All right.
Yeah.
I haven't even gotten to those. Are the graphs displayed? This is the last question. Are the graphs displayed in Trade Machine always up to date, or are they only updated periodically? Okay. This is for Trade Machine. When you get on a back test, the first thing you do is click 3-year test length. That will guarantee that the end date is today. And that will also mean that your graph goes through today.
And that if the end date in your backtest is today, then it will append the live stock data to the chart, in
Right.
which case you'll be current on everything. The links capture a moment in time. So a link is going to also capture that end date. That end date, unless you created that link today or unless the scanner created the link today, is not going to show today's date. We're going to put a little yellow flag around the end date just to highlight it so that people know that this backtest was up until a week ago or a month ago, so that that's a little bit less confusing. But like Max said, if you press any one of the buttons at the top, 1 year, 2 year, 3 year, it will update the current time frame, and then your data will be current, including your stock data.
Okay. All right. It's 8:10. We got a lot of thank you, Jason, for excellent presentation. And we will call it an evening or afternoon in your case. All right.
Yeah. All right.
Thank you,
Thanks, everybody.
everybody.
See you next time.
Come visit us in community.
Yeah, check out community and we'll send the recording out to everybody.
All right. You
See
have
you
a
next
good
time.
night. Take care.